All right, shares of Toll Brothers are on the move following a quarterly earnings beat, but the CEO did warn about the impact from the ongoing housing market slowdown. A couple numbers that jumped out to me here, guys. Net signed contracts were down 60% in units and 56% in dollars in this most recent quarter. Longtime CEO Douglas Yearly noting that the dramatic increase in mortgage rates since March presents a challenging market as we enter next year. Well, yes, it does.
Yeah, absolutely. And a few of the calculations that I was actually running for Toll Brothers, even if the pricing is higher year over year, you're still looking at an environment for them that has started to pull back because of the net signed contract value actually down by about 21% here. Contracted homes actually down 34%. That number coming in at 8,255. And particularly, one of the calculations that I was running was just to see how much people were paying on average for a Toll Brothers home. And on that $3.6 billion figure that they had mentioned with about 3,700 homes that they sold through, $956,000 was the average selling price for a Toll Brothers home in this most recent quarter. And so you think about the environment for financing right now, that's going to continue to be a headwind. And then additionally, how much they're going to have to continue to spend just to find property, to find real estate that they can build on top of. I don't know, maybe they've reached out to a Carvana since they're sitting on some lots there.
I mean, we've had so many companies come out and say that the outlook for 2023 is uncertain. So some of the analysts said that the fact that Toll Brothers even came out with an outlook, even released an outlook for 2023 is more positive, right? And the outlook is adjusted gross margin of 27%, earnings per share of $8 to $9 in its full year 2023. So it seems like analysts were fairly positive on that outlook. You're looking physically.
No, what is interesting, because we see this Toll Brothers quarter not good. Lowe's out this morning, new $15 billion stock buyback plan, also saying that demand is pretty stable so far in the fourth quarter. Real, I guess, difference between homeowners doing it yourself, fixing up or sprucing up your home, and I guess the new home buyers.
Well, and on that front, by the way, we're going to talk to the Ferguson CEO a little bit later in the show, which is a maker and retailer of home-related products. So they just released their earnings a couple days ago, so that should be interesting, too, to give us a fuller picture of what's going on in the industry.
Absolutely.